So we've had a couple of big announcements over today and yesterday in response to the coronavirus situation in India. Yesterday, of course, Finance Minister Nirmala Sitharaman announced the rupees 1.7 lakh crore package directed towards the most poor and vulnerable sections of the society. And today we had announcements from the RBI Governor Shaktikanta Das with rate cuts and a nudge for greater lending and infusion of liquidity in the system. So I have today with me as a guest Karan Bhasin, a policy researcher, economist, and we'll be asking him for his insights on what's happened over the last couple of days. Um, First of all, Karan, welcome on the episode.
Thanks for having me here, Karan.
All right. So, first up is yesterday you had this announcement by the finance minister, which was obviously very clearly geared towards the most poor and vulnerable sections. And although it was widely appreciated, there were, of course, questions of what about the middle class and what about things that people have to deal with, such as loans and everything. That got addressed today, isn't it?
Yes, absolutely. In fact, yesterday even I had a couple of questions regarding what can be done for MSMEs, because I've been saying for quite some time that during the shutdown, the way we see this problem, it has to be seen as a cash flow problem, which means that since economic activity is not happening, companies will not get any source of revenue, but their financial liabilities will continue. And that problem is very immediate, very real. And similar thing was with regards to their tax liabilities. So tax liabilities bit Madam Minister addressed when she did that press conference earlier this week. And she came out after the lockdown and she stated that within 36 hours they've come with a package for the poor and vulnerable. And I'm really glad that the immediate by within 24 hours RBI governor came out and said that, look, this is what we have up in our store. We recognize that this is a problem. We are going to boost liquidity. We are going to cut interest rates. But more importantly, what he said is that they will allow for a moratorium of 3 months on payments for term loans. And this is not just limited to commercial banks. That includes cooperative banks, all India financial institutions, NBFCs, finance companies, and microfinance institutions. So it's across the board, that they've allowed for a 3 months moratorium, which means that essentially you may not have to pay your EMIs, or you may have the option to not pay your EMIs for the next 3 months. And I think that's a major, relief for the middle class, which is not really certain about their future income,
Right.
especially those who are in industries related to hospitality, tourism, etc. And also for businesses, primarily MSMEs, which do not have the kind of cash flow to absorb the kind of shock that we are witnessing at the moment.
Right. And ever since the outbreak and of course the following lockdown, it's fair to say that the economic cycle has sort of slowed down tremendously, right? And as a response to that, you might have people who might have outstanding amounts to pay, say in terms of loans and everything. And it seems like as a result, you've had all this historic slashing of
Yeah.
rates.
No,
For instance, the reverse repo rate
hmm.
reduced to 4%, the cash reserve ratio reduced to 3%, and these are pretty much historic rate cuts, isn't it? Is that the signal to banks to look to not park your capital, but instead to just lend, and lend?
Absolutely. What we have been seeing over the last couple of months, or rather even a year and a half now, is that banks were using the reverse repo window very often, especially public sector banks, because there was aversion to lend. So what they were doing was that they were parking their money with the RBI using this window. So the slashing of reverse repo window is effectively RBI saying that, look, it's enough. Your prime business is to go out and lend, so you now get your act together and go out and lend to the industry. We want credit offtake to happen, and we want it happening right now. So it's a very positive signal. And with CRR cuts and liquidity infusion to the tune of 3 lakh crores, which by the way is over and above the 2 lakh crores of LTROs which were done in February and in March. So what we have is a central banker that has finally delivered on whatever it takes, and that is, looking at the problem in a more comprehensive manner, and that acknowledges that this is indeed an unprecedented situation. And it's not just the RBI which has taken these decisions. World over, you find central bankers across the globe taking decisions like these. They have been taking it in the past. In fact, one of the complaints that we had is that we are not doing it swift enough, or we aren't really being very proactive in announcements of these measures. And I think all of that changes with this announcement. And I think there's no reason to state that whatever has been announced is inadequate over the three announcements, two by finance minister and by RBI. I think they've covered a great deal of ground on what needs to be done immediately, as far as mitigating some of the short-term costs of lockdown are concerned. And as far as the point regarding this being an unprecedented situation is concerned, I took a look at the weekly jobless initial claims report in the US just yesterday, and it's at a historic high, and it's a very steep line, and that graphic in a way tells you exactly how unprecedented this situation is. With many parts of the world going into lockdown, you're looking at no economic activity happening over the next couple of months, and that to me is a situation that the world has never experienced. Uh, so whatever measures we are taking, it's very important that they happen, and we do cushion the industry, we cushion MSMEs and the poor and vulnerable, because they will not be in a position to absorb the shock otherwise.
Right. Now, you just spoke about cushioning. So it seems like over this 21 days lockdown, the government is probably looking at sort of first shielding the economy as such, protecting the economy, and then sort of preparing itself for what to do later, say in maybe the end of April and in the future months. What is your sense of what we can expect in the later months?
No, I think what you're saying is precisely true. And if I had to advise, I would have given the same advice, that you have to first absorb the shock and then look at how to get growth back up. And the reason why this is the correct approach is very simply the fact is that we were experiencing a slow and steady economic recovery because of the slowdown that we very sharp slowdown that we witnessed during 2018. So we were at 5% growth rate, around that figure, and now this slowdown is going to reduce it further. So the first step has to be to get back to 5%, and only then we can think of more measures to help us get to 7% or 6.5%, which has been the potential for a long time. Um, so that's definitely the correct approach to deal with this problem, and this is an evolving situation, so we don't really know what might be required going forward. For instance, I got to know just a couple of days ago that logistics and supply chains of medicines could be hit, because transportation sector is not really operating because of low volumes, and that's a problem that may arise a week or 2 weeks from now. So government will probably have to look into it and act and provide some sort of intervention in that direction. So what I'm trying to say is that it is a fast evolving situation. So as of today, it is very difficult for me to say what sort of measures would be needed uh, beyond April. But there are a couple of things that I do feel, which are very generic, but will be required, such as recapitalization of the aviation industry, because they cannot. It's a cash-rich business, and they cannot afford to absorb this shock. Now, how should that recapitalization happen? Some people suggest that it should happen through a 0% interest loan, whereas other people are suggesting for a direct fiscal intervention. Now, the mechanics of it we cannot comment just yet, but indeed, there are sectors like transportation, tourism, which will be hit throughout the year. So we will have to announce certain measures to assist these sectors, because around 3.8 crore people depend directly on tourism, and we just cannot afford to let them lose their jobs over the next coming months.
Right. Thank you so much, Karan, for your insights.
Yeah, happy to be here.